What's going on, guys? We're going to do a quick little technical analysis on the NASDAQ 100. So, market's a little choppy today, right? Not the cleanest of moves. I've taken maybe a handful of scalps playing in between this range. Most of those scalps were to the downside. Only reason being, if we kind of look at what's going on here on the daily chart, I'm starting off looking top down. So we're looking at this daily chart. We're on our third/fourth consecutive kind of choppy pullback day, right? If you go back to last week where we put in those highs of 24,068, you can see it was a little bit of an inverse hammer candle, right? A little bit of a doji style candle here up at this Bollinger Band. Now what we're looking at here is my big chart. Haven't shown the big chart in a while, but when the market gets a little bit choppy, I like to see each and every single supply and demand zone. So with that being said, on Friday, we closed below the daily 5 SMA, right? And I talk about the daily 5 a lot because I use it for intraday trading. I use it to either take bounces, I use it to take shorts, I use it to take breakouts. It comes into play a lot during the week, so it's definitely a level that you want to have on your screens, especially if you're trading in those lower time frames. You want to see where that daily 5 moving average is. Now, right now, we're coming into our 10 SMA. And if we go into a smaller time frame, like let's go into the 1 hour, for example, you're going to see how exactly messy this chart is, right? So a lot of supply to the top side. If the bulls want to see a significant breakout where the market's not going to be choppy, I'm going to be completely honest, they need to get back over 23,900. Okay. And we're about 150 points away from that. So you could expect this 150 point range to be extremely choppy. Okay. And when you run into periods and pockets of price action where we're doing this, it's not like you need to be upset. Like if you're finding it difficult to find trades, that's normal. Every day, I hate to break it to you, is not going to be an easy trading day. So when price action is in discovery mode, where it's pulling back to test support and it's kind of bouncing back up to previous highs and getting rejected, it's nothing more than discovery. I think, we've got a lot going on in terms of things that are going to be on the plate here. Are we going to be lowering these interest rates, right? There's a lot of talk about lowering these interest rates in the month of September. So market could be waiting for that. There's a lot of different things that the market could be waiting for. Again, if we kind of look at what's holding today on a 1 hour chart in terms of demand, well, this level that we keep holding here, this is your 200 EMA. So your exponential moving average. And we're kind of bouncing off this, the past 3 hours, right? We came down, we bounced, we came down, swept it, and we bounced. Below this 200 EMA is our 200 SMA. So in a situation like today, the lower you get into that demand zone, the less and less you want to start those short positions, because the last thing you want to do is start a big short position just right at the 200 EMA or the 200 SMA, because there's a good opportunity for the buyers to step in and bounce this back up into supply, 750, 23,800. So what you're looking for in these type of situations is you want to see a higher time frame candle, whether it's the 1 hour, 4 hour, or even 30 minutes. You want to see one of those candles close below that demand. Okay. And once we close below that demand, then you want to see a following candle. If you want to follow it on a smaller time frame, 5 minute, 2 minute, 1 minute, then you want to see that price get confirmed. So if we were to close, let's say coming out of lunch below 23,710, what you would be waiting for is on that next hour candle or next 30-minute candle, whichever candle you're following that closes below that demand. Then you can drop down into your smaller time frame and take the confirmation once we confirm that. In my opinion, keep everything to a scalp. 5 points, 10 points, 15 points, nothing more than that. Right now, we're in a period where you're just looking for cash flow, okay? You're not going to really look for a whole lot. Don't try to sit here and catch a 100-point move. Make a little bit of cash. Remember, if you stack up $150 a day, a $200 day, realistically, in 2 to 3, in 3 to 4 weeks, you're going to be well in line to getting those payouts with these prop firms. Take it day by day. The more you try to make $500 days, $1,000 days, the farther away that goal is going to be. Because when you're trying to make more cash per day, you're opening the door up to more risk each and every single day. So while the $500 day, the $800 day, the $1,000 green day seems great and promising, you have to realistically look at it. You're not really gonna put $100 worth of risk on the table and make 1,000. Is it possible? Anything's possible. However, the percentages and the probabilities tell us that if we're going to look for $500, we're going to be risking close to $500. If we're looking for $1,000, we're risking close to $1,000. That's why for me, when I break this down at scale, I'm looking for $150, $250 day. And I'm also looking to risk $150, $250 a day. I want to keep that losing day right in line with my winning day. And I know that my strategies, the bundle of them, they hit at about a 65 to 75% win rate. Now, over a series of trades, today I could win 100% of my trades. Tomorrow I can win 50%. But over a scale and a series of trades, it's going to be closer to about 70% of those trades that I take are going to be winners, which tells me that I just need to trust the math and I need to get through the losses, get through the red days, because that's part of the plan. So just to kind of recap, support sitting at 23,710. I don't see a short position until we get below that. You could look for bounces back up to the upside, but again, think scalp, think take profit quickly. The buyers are not out of the woods yet until we're at least over 23,900. Okay. So in between this range is going to be a little bit more difficult. Hope this helps. Hope this gives you a little bit kind of a context or some clarity as to what we're looking for. And again, be patient. This is going to happen. We're not going to get every single day where the market's ripping 1,000 points up, 1,000 points down. So with that being said, hope you guys enjoy the rest of your trading day. Stay calm, stay patient, guys. The market's going to be open tomorrow. It's going to be open next week. We're going to have many more opportunities to find great price action and great trades. I'll see all of you guys on the trade floor.